From the time that I was very young, even as a small boy, I remember having a lot of deep-seated fear about money. There was something about money that made me afraid and uncertain. After I got married and I started building a family, I began to ask God to send men into my life to teach me the truth about money that I did not know. That was when Ray Poteet and Nelson Nash came into my life, and I learned about the infinite banking concept. This podcast is about the love affair that I have been having with infinite banking since that time. Welcome to the Duryea Financial Podcast. Hello, everyone. Welcome back to the podcast. It's great to have you here as always. Today, I am going to be talking about premiums and our relationship to premiums. The reason that we're dedicating an entire podcast episode to premiums, and really we could do a whole podcast series on premiums, is because if we don't understand premiums properly, then the whole infinite banking concept is going to fall apart in our head, and we're not going to understand what we're doing with the infinite banking concept. The first thing to realize about premiums is that we have been conditioned to think about the word premium in a very specific way, and not just for our entire life, but for the lives of our parents and our grandparents and our great-grandparents for a long time. When somebody says something to you that they have believed very deeply for a long time, it's different than that when they say something to you that they don't really believe. So when you were a child and the first time that you ever heard your parents or grandparents talk about the word premium, it had a big effect on you because they used that word in a specific way. So if your father said to you when you were 7 years old, "Hey, can you pass the salt?" That was just a very normal thing to say. It was a very surface level thing to say. It probably didn't have a massive impact on you. But if you heard him say, "We have a really big premium coming due," he would have said that with a lot more weight. He may have even said it with some fear or maybe even some anxiety. And every time that you ever heard someone use the word premium, in the tone of their voice and the weight of their voice, and then the way they used that word, the context in which they used it, the sentence structure in which they used that word, before you got to the infinite banking concept, that word meant expense. That word premium meant something that was taking money away from you, something that was costing you something. And it referred to a premium on some kind of insurance policy somewhere, that if you could figure out a way to get rid of that insurance policy, you would do it, because it's an expense going out the window, and the only time that you're ever going to be able to get anything back from that premium is if something catastrophic happens that you don't want it to happen. Like if on a health insurance policy, you pay your health insurance premiums, but you probably wish you didn't have to pay your health insurance premiums. And the only time you get to, quote unquote, get to use your health insurance is when you're sick. And who wants to be sick or injured? So the conditioning, and it's the same with automobile insurance, it's the same with homeowners insurance, it's the same with dental insurance and everything like that. We really don't like the word insurance, and we don't like the word premiums. So when we come to the infinite banking concept, it's really important to learn that one of the key transactions, or that initiates cash flow in the infinite banking concept, is a premium. It's one of the things that we have to get past in order to be able to do infinite banking properly. Otherwise, we're always going to be stuck in the fear of premium. We're always going to be living in that environment. It's not that there's nothing bad that can happen. We need to manage our premiums properly, and premiums can cause people problems. I'm not saying that they can't ever cause people problems. What I am saying is that there are a lot of misconceptions about the word premium. Nelson Nash used to say, there's no such thing as life insurance premiums that are too high. Most people are shocked when they hear him say that, but the reason they're shocked is not because Nelson's saying something crazy. The reason that they're shocked is because no one's ever shown them how a life insurance premium actually works on a dividend-paying whole life insurance policy. So that's what we're going to walk through today on the podcast. We're going to walk through how do these premiums in life insurance policies actually work. Your success with the infinite banking concept is going to largely be determined by your relationship to premiums and also to loans and loan repayments. Today, we're going to be focusing on premiums largely. As long as you view a premium on your whole life policy as an expense or an obligation, the infinite banking concept is going to continue to be confusing to you, a fearful and confusing thing. Now, I can tell you that God is never in confusion and he's never in fear. Even if the infinite banking concept is not for you, you should never be in fear or confusion about premiums. What we should look for is clarity regarding premiums and then decide what we want to do based upon the clarity that we can find. If you misunderstand premiums, this just leads to hesitation and fear and underutilization of IBC. There's just a lot of people out there that would benefit from infinite banking much, much, much more if they would just make their premiums much higher. Your banking with your policies is guaranteed to produce more for you the higher that you make your premiums. All the guaranteed values of everything in the system goes up. And that makes sense. I mean, think of it in terms of real estate. If you invest in $1 million piece of property, that property is going to produce a lot more wealth and cash flow for you than if you buy a $100,000 property. Now, a lot of people aren't ready to buy $1 million property. They're only ready to buy a $100,000 property, and that's fine. But viewing the $1 million property as a bad investment just because it's a big investment is not correct. You just need to be able to know what's going on with the property, understand the management of the property and the financing and the cash flow and everything else. But if you understand what's going on, you'll know what to do. And so the more we understand premiums, the clearer our thinking is and our understanding is about premiums and how they work and what they are, the more comfortable we become with using the infinite banking concept as a platform for financing anything we want, particularly in financing major items. That's what Nelson used to say all the time. He used to say that really the infinite banking concept is just attacking the idea that premiums are scary or bad or dangerous, and therefore we should keep them as small as possible. He's like, no, the infinite banking concept is all about how really high premium dividend paying whole life insurance actually gives you a substantial leverage option at the life insurance company. And it builds you a way to leverage your money in a way where you don't have to use a bank for that leverage. You get to use the life insurance company instead. A proper perspective on premiums unlocks your confidence and your long-term success with infinite banking. Without this big picture of understanding premiums, the details about your policy design are really meaningless. You're not going to be able to understand anything that's going on really in infinite banking without the proper perspective on premiums. Every premium payment is simply a capital contribution to a system of policies that you use for personal banking as an enterprise. That's what it is. The first and most basic mistake that many people routinely make, and I made this mistake many times, is the misclassification of a premium as a transaction. We tend to view our life insurance premiums on our whole life policies as an income statement transaction. In other words, it's an expense that is getting subtracted off of our income. This is an accounting error. A whole life insurance premium is not an income statement transaction. Type it into ChatGPT or whatever AI you want to and ask it this question. Is a whole life insurance premium an income statement transaction or a balance sheet transaction? Many people subconsciously treat premiums as though they are a liability. The fear of not being able to pay a premium in the future leads to underfunding policies all the time. This fear is often overstated and based on misunderstanding. There is a lot of fear, especially on the internet, a lot of fear language on the internet that is not based in reality. It's based on a misunderstanding of what a premium is and how it actually works. One of the advantages to getting a life insurance policy with someone whose expertise is in coaching people as a practitioner of the infinite banking concept is that they design policies where the premiums are very flexible. Policies that are optimized in their design for IBC have a very flexible premium. Normally, when people get a whole life policy, all there is a base premium, and the premium never changes. It can never go up and it can never go down. There isn't. It's just like if you choose to put $100,000 a year into a policy, it's $100,000 a year for the rest of your life, no matter what, and there's no flexibility whatsoever, at least not until later in the policy when there's so much cash value that it could cover its own premium, and that wouldn't be until year 10, 15, or 20 or something like that, depending on, exactly what product you're working on and from which company. But with a policy designed for infinite banking, there actually is a wide range of premium that you can pay into that policy per year. So let's take $100,000 a year premium on a policy designed for the infinite banking concept. The base premium, which is the annual minimum premium, the floor premium, there's going to be a floor premium and a ceiling premium, and then a wide flexible range in between the floor and the ceiling. The base premium is the floor, and normally with an IBC type policy, the floor is $30,000 or $40,000 a year. If you're talking about a plan that wants to contribute $100,000 a year to a premium, so your annual minimum, let's say, is 30 or 40, and the maximum is actually going to be something like 120 or 130 or maybe even 140, depending on how the policy is designed. You can contribute anywhere within that range each year. Anywhere between this floor and the ceiling is fine. You can put in 40 a year, you can put in 80 a year, you can put in 115 a year. There's a wide range of flexibility between the floor and the ceiling. You can aim high in your plan for a policy without being locked into that as a maximum annual contribution. And there are no penalties for contributing less than the maximum. It's just that if you contribute less than the maximum to the premium, you don't get a penalty, but the policy just doesn't accumulate equity as quickly. That's all. So when you're choosing your premium, the best strategy to choose is to start with a larger capacity. If you know you can do, let's just take $100,000 a year again. I mean, it could be 50, it could be 20, it could be 5, it doesn't matter what it is. It could be 500, could be $1 million a year, it could be 5 million a year. I mean, it all depends on what your wealth level is, but let's just take $100,000 a year. If you start with that, and if $100,000 a year feels like a higher premium to you, don't feel scared that, oh my gosh, I have to make sure I have to get up to $100,000 a year. You don't. You can contribute less in leaner years, and you can scale up in stronger years. So let's say you have a really great year in your farm or your ranch or your business. Well, put in 130 that year, like max the thing out, And then if you have a down year or a lean year, just put in 40 or 50 or 60 if that's all you can do that year, and just keep going. The key is to keep going. Infinite banking is something that becomes very profitable and very beneficial over a long period of time. And again, every time you pay a premium, the guaranteed values of the policy are guaranteed to go up. And every year that you keep the policy, since you're in a mutual life company, you're going to get a dividend. And those dividends tend to be really good in really good mutual companies. They may go down a little bit when interest rates go down, and they may go up a little bit when interest rates go up. But in general, you can expect really good dividends from a good dividend-paying mutual life insurance company, which is the only kind of company that we use. We use the best companies available for this type of concept. Furthermore, if you do a policy that's designed for infinite banking, let's say that's the same policy that we've been talking about. Let's say the minimum is 30,000 or 40,000. Let's say the maximum is 130. If you pay a higher premium per year in the first 5 or 6 years, let's say after 5 years you've put in $100,000 a year. Well, the cash value is going to be over 100,000. So if you run into a really lean year, you can actually use the equity in the policy itself to carry the minimum premium that year. So your out-of-pocket premium in that year is actually going to be zero. Nelson was famous for doing this, for funding a policy for 5 years and then doing a premium offset. And now I have a policy that's established and it's got all this cash value. Every time I put in a premium, the cash value now goes up by more than the premium. And there's never an absolute requirement to contribute, that I have to contribute out-of-pocket premium into that policy every year. You're always going to want to if you have the capital to do it, because it's the best place for your capital to reside until you decide what you want to do with it. Whether you want to make a capital contribution to your business, or make a real estate investment, or purchase a new car, or, go on vacation, or, make another investment of some kind, or finance your daughter's wedding, or, do your monthly expenses, or create a line of credit, or loan money to a third-party lender, or whatever you want to do. So when do the problems with premiums actually occur? Well, the issues are rare with premiums. They really are. Because first of all, people really don't acquire a policy with a high premium like this until they really feel comfortable with it. I mean, people take their time coming to the infinite banking concept, and they should. As they should. You should do all your due diligence. I did a lot of due diligence until I got my first policy in early 2018. But where do the issues come from? Well, they're rare, but they usually come from a few different things. A severe income loss early on. So let's say that you have you're running your business and you've got a lot of revenue and you're very comfortable with the premium, and then suddenly you have a huge business challenge and maybe you maybe even go out of business. And well, that would be a really difficult thing on your banking strategy too. But that was going to be a difficult thing on your banking whether you had policies or not. Another thing that can cause problems is very poor policy management, i.e. borrowing from your policy with no repayment strategy whatsoever. All I'm going to do is pay the premium. I'm going to borrow every penny out of the policy, and I'm never going to ever even think about paying the premium back or what all the ramifications are about that. In other words, I'm never going to learn how to borrow from myself and how to pay myself interest and how to pay it back. Now, a lot of people never pay their policy loans back. But the people that do that successfully understand what paying yourself interest means. They understand the grocery chapter in Nelson Nash's book, Becoming Your Own Banker. They understand the cost of capital. They understand that they need to increase their premiums in the form of interest every time they take a loan. If you don't understand what I just said, go back to my podcast episode entitled Episode 43 of my podcast, How Interest Really Works in IBC. That is the most listened to podcast of all time on my podcast, and it will show you. It perfectly demonstrates what I just talked about. And so, yes, do people borrow from their policies and never pay it back? Yes. If they don't understand the grocery store chapter, if they don't understand how to borrow from, what the ramifications are of taking a policy loan, and they just have absolutely no plan and absolutely no understanding, that's poor policy management, and that can lead to problems with your premiums and capitalization. Using loans for depreciating expenses only with no discipline. That's another thing that can cause issues with premiums and capital and capitalizing policies and funding and everything. So you need to learn the details of infinite banking. The two most important things to learn about infinite banking is the proper perspective of premiums, understanding that they are balance sheet transactions and not income statement transactions, number one. And number two, understanding what a policy loan is and how it actually affects your cash flow and your financial plan. And again, some people borrow from their policies and never pay it back. Or at least they wait a very long time to pay it back, and some of them never pay it back. But you should never do that without understanding paying yourself back as a strategy. Paying yourself back is different than paying off the policy loan. You need to understand the difference between those two things. And again, if you don't understand the difference between those things, go back to episode 43 and listen to the podcast, How Interest Really Works in IBC, and it will spell that out for you completely. So, to sum up, don't let fear dictate your policy design. In fact, don't let fear dictate anything that you do in your life ever. Paul was writing to Timothy in 2 Timothy 1:7. And this is actually when Paul was in prison in Rome, and he knows that he's on death row. He knows he's not going to get out of it. He's writing to Timothy and saying, please come see me. This is it. I'm not getting out of this one. He knows that he's not going to make it out. His time has come. He's writing, I've run the race. I've fought the good fight. I've kept the faith. Timothy, come see me. I have things I want to bestow on you before I go. And he's in prison. He's on death row. He knows he's not going to make it out. And in 2 Timothy 1:7, Paul writes, for God has not given us a spirit of fear, but of power and of love and of a sound mind. It is never good to make any decision based on fear. Make decisions based on love, power, and soundness of mind. Get clarity on what premiums actually are and how they actually work. That may cause you to want your premiums to be lower than you originally thought. But for 90% of people or more, when they discover how premiums actually work, over 90% of people decide that they actually want to make their premiums higher because they find out how flexible they are. They find out they're just a transfer of equity from one place on their balance sheet to another place on their balance sheet. Why is there no logical reason to be afraid of premium at all? Because there's no logical reason to be afraid of anything at all. This is why infinite banking is such a good kingdom thing, because those who know that God is their father and I know that I'm his son, I don't ever have to make a decision based upon fear. I can make every decision based upon love and power and sound-mindedness. That doesn't mean you should do infinite banking. That doesn't mean that you should make your premiums higher. It means that all you need is clarity and knowledge and understanding, and then you'll know exactly what to do and to make your decisions out of love and power and sound-mindedness. It's just been my experience in my own life that as soon as I understood what premiums actually were, I immediately made my premiums much, much higher. So that's what happened to me. That's what I've seen happen to many, many, many people. And that's the truth about infinite banking. Clarity on premiums will almost always cause you to make your premiums higher, because the higher your premiums are, the more you get out of infinite banking. You get out of infinite banking what you put into infinite banking. You should not put more into the infinite banking concept in your life until you understand and have clarity. So that's what this podcast is all about. Align your premium strategy with your long-term vision, not your worst case fears. Even if you never do infinite banking, don't ever make decisions about your finances and your cash flow and your wealth building built based on your worst case fears. Always make your decisions with your wealth building on your long-term creative vision that God has put into your right brain. And then use your left brain to learn all the details and learn how to sort all the pepper from the fly shit, and understand that the devil is in the details and you need to know the details. And that's where a lot of the clarity and the knowledge comes from. Never make big decisions in your life based upon your worst case fears. Make big decisions based on your long-term vision and your clarity of your understanding in the details. When you come to fully understand your premiums as an intentional capital contribution, you're going to shift out of fear and into enthusiasm about infinite banking. As long as you view premiums with fear and hesitancy and as this dangerous thing that can jump up and bite you on an annual basis, you're never going to be excited and enthusiastic about infinite banking. Why would anybody want to do infinite banking if they had a lot of fear and trepidation and anxiety and reluctance? You wouldn't. You want to be excited and courageous about your financial strategy. And I hope that's what you got out of this podcast. I hope you got out of this that, coming from a person, Michael Duryea, who used to be very, very afraid of premiums, very reluctant about premiums. And now I look forward to paying my premiums, because what it means is every time I pay a premium, it means that the banking system of the world got less capital and the banking system of Michael Duryea got more capital. So that's the best perspective for your premiums. That's how to think about premiums properly. If you have any clarifying questions, don't hesitate to reach out. We love to help people with infinite banking, obviously. And have a great week. We'll talk to you next week. Take care.